Hello Mavericks, and welcome to today's currency recap. It is Thursday, July 27th. So we're going to start off with a review of the trading day by taking a look at some meaningful news, taking a look at the broader equity market analysis, and also some commodity analysis. We're then going to take a look at some analysis on the major indices. We're going to look at our currency baskets, and of course if there's any major news events coming up to close out the week. Then finally, we're going to take a look at a few trading setups and opportunities in the currency markets. In this currency recap, we will be using advanced technical analysis. We believe that technical analysis is the fundamental skill of every profitable Forex and crypto trader. Maverick Currencies is currently hiring serious technical traders for a trader position. Traders will trade firm capital and keep 70 to 80% of profits generated. So if you're a technical trader with a technically based trading system, we want to meet you. Click the application link in the description below this video. Let's break down today's market action. All right, market analysis. Well, there is a lot to talk about today. The yen strengthens in a way we haven't seen in quite some time. There's a post-Fed hangover in equities, and the dollar strengthens too. So taking a look at the broader market here, we can see that equities have traded down on the day for the first time in what feels like a while. Gold down and oil up. Now, in terms of our fiat currencies, the yen and the dollar were the clear outperformers on the day, with the Canadian dollar holding somewhat steady. That's the North American shine effect right there, and pretty much everything else was down on the day, with the European currencies being the biggest relative losers. Over in crypto, things are steady. I mean, yes, we can see that Ethereum, Litecoin, and Bitcoin are all down right now. Bitcoin Cash is slightly above water, but these are not big moves relative to the volatility that this asset class is known for, hence why they're staying somewhat steady. Now, in terms of the market outlook, we've got to stick with a +3 here despite today's down day. I mean, we're still above both moving averages, and the slope of both moving averages remains positive. So taking a look at this chart of the S&P 500 index, I pointed out this parallel channel last week. And it's kind of funny how market timing works out, but exactly a week later, we have now hit the top of that channel and rejected it quite decisively. What happens next remains to be seen, but yeah, just thought it was cool to keep this channel on your radar, the parallel channel that is. Now, in terms of news events, so the big news out of Japan today really has been that the Bank of Japan is considering playing with their yield curve control, and that could potentially, let long-term rates rise beyond the current 0.5% cap. The Bank of Japan is a bit of an anomaly in terms of central banks around the world that have engaged in a rate hiking cycle. The Bank of Japan really has not followed suit. So if the BOJ does follow suit in an extremely lagging effect, geez, the upside in the yen could potentially be monstrous. Of course, this is just fundamentalist cocktail talk. We're going to take a look at the price charts in the yen first, next, or shortly, to see what might really be going on there. Okay, so in terms of currency analysis, the velocity scores are pretty telling. We've got the dollar and the yen in +3, and all the European currencies and the Kiwi and the Aussie dollar trading at -2, -3, and the Canadian dollar is kind of smack dab flat at 0. So with that in mind, we're now going to take a look at some possible trades. We're going to kick things off, of course, by looking at our friend, the yen. So I mentioned that, the yen was hitting really uncharted territory when it broke to a significant new low, just a few weeks earlier. Now, currencies tend to be in fairly stable ranges. Yes, the markets can trend fiercely, but if you look at technical charts of currency pairings, you'll see that a lot of them just trade in large ranges. The pound, kind of an exception to that. The pound's been technically in a 300-year bear market. Of course, that doesn't mean you should only play the short side in the pound, of course. So the point I'm trying to make here is that we've reached a historical extreme. It makes sense that we'd start to see signs of a significant recovery in the yen. Now, whenever something's in a downtrend, or an uptrend for that matter, I want to give that trend the benefit of the doubt until the market has really proven that we're no longer in a downtrend. So let's take a look at what's been going on here. The market made a lower low at the beginning of July, on July 5th, and then it made a lower high. It failed to make a lower low, and we've now just made a higher high today. Now, relative to the immense series of lower lows and lower highs that we've seen for quite some time in the yen, this really doesn't tell us much, at least not right now. So it's possible that this is still an ongoing bear market rally, and we're going to see further decline in the yen right now. So I'd be very cautious of just leaping in and buying yen just because we had a good day today. We're already off the highs a little bit. And now I'm also saying be very cautious about shorting the yen. You know, I don't think it really makes sense to be jumping into any trades involving the yen right now. We've had such a large move. Momentum indicators are all stretched out. It really is wise to let the yen do its thing here. Gauge the nature of the pullback. See if that pullback is going to result in a trading opportunity or not. All right, so I think the yen is very tricky. And there's going to be a lot of people that are going to load up on yen given the nature of the move we've seen today. It's too early to say whether those people are going to be proven to be very clever or not. My hunch is that the yen has a little bit more upside. I'd like to see us meet the upper end of this parallel channel, but it's going to take a breather. I'd be very surprised if we just shot straight back up without a bit of consolidation first. Okay, next up is the dollar. The dollar is going to be brushing up against this broken support line fairly soon. It'll be interesting to see how we react until we either brush up against this trend line or start failing and breaking down fiercely. I don't really have much interest in trading the dollar. I'm in kind of a wait and see mode. Swissy, I like playing the short side in the Swissy. Remember what I said about the yen? The same thing applies to the Swissy. We've reached this extreme peak that we haven't seen since 2015. I would not be surprised if there's some considerable Swiss franc weakness ahead in the weeks, if not months, to come. Euro, so last week I said, hey, we're in double top resistance territory. Next support level is in play. We hit that support level today, back in a wait and see mode with the euro. I wouldn't be surprised if we got a bit of consolidation, bit of sideways movement, but given the weakness in the Swissy, I favor the downside still. We've broken the support line, and I'm looking to test the lows from early June. The pound, like I said, my bias is to be short the pound, given how significant this multi-year resistance period zone has been going back, all the way to 2018. And if we really take out this downtrend line significantly, I'm definitely going to be looking for short setups on the pound. Canadian dollar, it's a bit of a mixed bag here. I really like how we've traded back up after testing support here. I don't see any good setups involving the Canadian dollar right now, but if I would treat the US dollar and the Canadian dollar somewhat similarly in these current periods right now, where there will be times where the US dollar slightly outperforms the Canadian dollar and the Canadian dollar slightly outperforms the US, and it's on those periods of relative outperformance that I would be more inclined to pick one of the North American currencies over the other. Okay, the Aussie, I said I kind of liked the upside in the Aussie last week. That just hasn't played out. And I said that it's a little bit unusual that the New Zealand dollar would look so weak, whereas I'm seeing signs of bullishness in the Aussie. Well, the Kiwi confirmed, my bearish bias, and the Aussie has failed to confirm my bullish bias. So that tells me that these APAC currencies, or the APAC commodity currencies, the two major ones anyway, the Aussie and the Kiwi, are likely to languish for a little bit longer still. So the chart pattern in the Aussie is not very clear. I think there's a good chance we're going to start testing the July 11th low, so there is a little bit more room to play, but I would say the Kiwi looks a lot better. We've broken out of this parallel channel, we're heading lower, and there's a lot more runway here for the downside in the Kiwi, I think, before we run into significant structural support. And the pivot point you want to look out for is that low from the 7th of July. All right. So in conclusion, risk-off sentiment is back, volatility is back, and that just means playing relative strength and weakness is all the more important. And given the volatility in the currency markets, please pay attention to your position sizing. All right, traders, that's it for me. Looking forward to seeing you soon.